Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at some of the things which have been going on this week, how it's been impacting markets, and potentially what's coming up for the rest of the week. So before we quickly jump into the charts, I just want to sort of give you the lowdown on a couple of the key events that have been happening this week. First one to probably talk about is we're getting the results in from the US midterm elections, and the Democrats have done better than expected, and a lot of these races seem to be too close to call at this point. But it looks as though the Republicans are still going to win a majority in the House of Representatives, which means that regardless of what happens with the Senate, whether the Republicans do manage to win it or whether Democrats hold on, um, we're still in this scenario where Congress is going to be divided. You're going to have potentially the Democrats maintaining control of the Senate, but the Republicans get in the House. And that means the Republicans can essentially block legislation, any legislation that the Biden administration tries to push through. So we are facing this split Congress situation where there's gridlock politically, which should probably, I mean, investors and the strategists that I've been reading, they seem to think that this is a positive. Let me show you the S&P 500 quickly, actually. Hasn't really been responding positively, although it has held on to the gains that we've seen since earlier this month's lows. But historically, the S&P 500 has done very, very well in the 12 months following midterm elections that have resulted in a divided Congress. Okay, so that might be something which could encourage a bit of buying today and in the next couple of days and weeks. Although, as a lot of people have been saying, upcoming inflation data in the US on Thursday remains by far the most important thing to be watching this week. Let me just show you quickly on the calendar. We've got that coming up on Thursday, 8:30 a.m. US time. And we're expecting the headline to fall from 8.2% to 7.9% year over year. You're expecting core price pressures to moderate slightly from 0.6% month over month to 0.5% month over month. Still very hot, but if we do have this inflation and still well above the Fed's 2% inflation target, but if it does ease a little bit as we're expecting, that could potentially also support market sentiment a little bit. But another piece of news, which actually, let's say two pieces of news that are kind of holding back sentiment this morning a little bit, um, potentially preventing the S&P 500 from testing weekly highs, is first of all, we had this news of layoffs. Let me just get the information up. Yeah, big layoffs at Facebook, letting go of 11,000 employees, 13% of the workforce. One of the biggest individual layoffs from any company so far this year. And this is a growing trend, by the way, particularly in tech, but it looks like it could be spreading to other areas. Facebook shares are up a little bit. Let's have a look, actually. Oh, I mean, actually, they're pretty much flat. Um, And, there might be some people that take this kind of information as a positive because if you want inflation in the US to start coming back rapidly to the Fed's 2% target, which would enable them to take an easier approach to their interest rate hikes and monetary tightening, um, you need to start seeing the labor market in the US, which up until now has been very, very, very strong, very hot. You need to start seeing that easing a little bit because a hot labor market is inflationary. Um, and then another thing which has gone on has been this thing with it's a crypto specific piece of news, but it has caught the attention of the sort of the mainstream investing crowd. One of the largest, or I think it was the third largest cryptocurrency exchange in the world, FTX, has basically imploded. There was a rush to withdraw. Its users trying to withdraw all their assets from the exchange, and they had to basically halt withdrawals and go crawling to the biggest exchange in the world, Binance. And now Binance, it's not confirmed yet, and Binance could still pull out of this deal, but Binance are going to be buying FTX in order to basically help them out so they can actually do those withdrawals. But there's a lot of worries in cryptocurrency markets at the moment, and you can just see here that Bitcoin is down another 5% today after dropping nearly 10% yesterday. You know, now we're taking losses since earlier this month when things were looking a little bit better for crypto. We're down nearly 20% in the 17,000 area. And then if you look at cryptocurrencies like Ethereum, you know, we're down even more from our earlier monthly highs, nearly 30%. Why is this affecting the broader cryptocurrency market? You know, Binance is probably going to buy FTX. So why is it affecting the broader market? Well, FTX is linked to this other cryptocurrency, massive cryptocurrency sort of hedge fund called Alameda Research. Alameda Research, yeah. Basically, they got the same CEO, Sam Bankman-Fried, or Fried, CEO of FTX and Alameda Research. They're very closely linked, and it looks like this big hedge fund's going to implode as well. That big hedge fund owes loads of money to loads of different other crypto industry businesses. So, you know, it could be triggering this massive liquidation event across cryptocurrency markets, which is basically causing a lot of sell pressure. You know, should it be the end for crypto? Of course not, because the Bitcoin blockchain and the Ethereum blockchain and their underlying technologies and networks remain as strong as ever. And you know, the interest in these technologies in the long term and the amount of building and developing that's going on means that everything should be okay, I would think. But yeah, just some short-term sell pressure that could exacerbate the bear market we were already in. Um, let's go to currencies real quick because the DXY is interesting me at the moment because it's just found support at a long-term uptrend. Look at this, going all the way from the start of the year, this uptrend, 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 and we just bounced. Haven't managed to get back above 110, but this is technically significant, I believe. Um, does it mean that the long-term uptrend is going to continue? Well, you know, if we get hotter than expected inflation data on Thursday, and we still continue to talk about an ever higher Fed terminal rate. I mean, we're talking about a Fed terminal rate of, you know, just above 5%, between 5 to 5.2% at the moment. But if the labour market fails to moderate and inflation remains hot and all these kind of things into the end of the year, we could soon be talking about a 6%, or a closer to 6% Fed terminal rate. And if that's the case, big if, but you could see the dollar bouncing back towards recent highs. Technically speaking, you know, there's reason for this to happen. You could probably argue that this sort of flag we formed in the last couple of days is a bullish flag. So you're in an uptrend, and then you get these moments of consolidation, but then that sets the stage for the next part of the uptrend. It's a very common occurrence that you see in markets. But yeah, we're just gonna have to wait and see. In terms of the calendar, I've already talked about US CPI, which is certainly the main event of the week. Keep an eye on all this Fed speak because we want to know if the Fed's going to slow down the pace of rate hikes. Seems like it's leaning that way. And you've got Fed Watch. Let me just show you the CME Fed Watch tool because markets seem to be getting a little bit more confident now that it's going to be 50 basis points at the next meeting in December. Yeah, I mean, we're sort of 56.8%, 43.2%, 56.8% in favor of a 50 basis point rate hike. A week ago, we were kind of a little bit closer to like 50-50. But anyway, we need to be watching that Fed speak so we can inform that view. And then tomorrow, UK GDP, US preliminary November consumer sentiment and consumer inflation expectations. That'll be worth watching as well. But yeah, guys, that's pretty much it for the rest of the week. It's what you need to be looking out for. Hope you enjoyed the video. Hope you all found it informative, and I will see you all in the next one.